Both Japan and Switzerland have taken action to try and curb the strength of their respective currencies over the last 24 hours, but will it work? Bayat Sikantala from UBS joins me now from Zurich. Bayat, what's the point of these actions? Because recent history tells us it just doesn't work in the long run.
Well, I think first of all for the Swiss National Bank, I think that the market has probably, when you look at comments that people have put out, I think the market and most analysts, particularly outside Switzerland, have tended to dismiss the S&B action quite easily. I think that would be a mistake. I think the Swiss National Bank is very serious about this because clearly Euro-Swiss at 110 is potentially a disaster for the Swiss economy. We risk, large parts of the export sector, wiped out if we go towards parity. I think the S&B is aware of that. That would mean deflation. That would mean very low growth rates. So they will try to avoid such a scenario with the means that they have at their at hand. So further measures will be taken if we stay at these levels or go even lower in Euro-Swiss. This could be a number of administrative measures, certain taxes on certain investments, things like that, and FX intervention certainly will be an option as well.
So do you think it will actually work in the long term, because Switzerland cannot cure external problems which make the franc so attractive?
Yes, these problems globally are very serious and very deep problems, and it's very hard to go against them. But I would argue that there is no other way than to try. I mean, the Swiss National Bank has to try and protect things, and the big advantage that they have is that in difference to say a country like Brazil, which is also trying that, there's no inflation in Switzerland. In fact, there will be a deflation risk pretty quickly, and so they don't need to worry that if there's more liquidity in the market, that's a problem. And also, if they do want to sterilize interventions, then that's very cheap because rates are practically at zero, whereas in Brazil, the government spends a lot of money sterilizing and issuing domestic bonds, which are expensive. So in a simplistic way, you can say the Swiss National Bank can print as many Swiss francs as the world wants. Now, of course, the world is very big and Switzerland is very small. So there is a point if this demand for Swiss franc remains very, very high, it's difficult to go against that. And certainly, if there's a scenario of the eurozone breaking apart, for example, there will be very little that can be done. But even in that scenario, they can implement capital controls. It would be a very dramatic move, potentially very dangerous, and certainly not taken easily, and not taken at this point because we are not there yet. But at some point, it may be necessary in a kind of in a scenario where countries, for example, were to leave the eurozone.
So, are we entering a period where we could see currency interventions by the SNB?
Yes, I think so. I think they have said they will take further measures if required, and they will. And so I don't think one should compare this with last year. We were at around 140 levels when interventions were stopped and didn't quite work, and we are in a very different situation right now. So just to say that last year it didn't work, so they'll not try again, I think would be wrong.
Do you have any idea what sort of level the S&B are actually looking for?
There's no indication, and I think, the indications we had from last year when they started at 150, which with hindsight was clearly a mistake to start so early. Then 140, I think it would be illusionary to think that there's any chance we could go back to 140. So, maybe at 120, they may be satisfied, or maybe at 120. 120 is maybe a level with which the Swiss economy can live, but I don't think we can really live with a 110 level, or at least this would have quite stark consequences for the Swiss economy.
And just to finish on Japan, are we going to see intervention becoming a common theme for the yen as well?
I think one difference between Switzerland and Japan is that the yen is arguably not that much overvalued. It is dollar yen nominally is of course close to record lows. But in real effective terms, meaning in a trade-weighted basket and inflation-adjusted, the yen is not that strong because Japan has had deflation, so that kind of distorts the nominal picture. So, whereas the Swiss franc is clearly very overvalued. So I think for Japan, it's actually more difficult to make a reasonable case that the yen should be much weaker than it is, and so I'm less convinced that the Japanese interventions will work, and also there's no talk of Japan implementing other measures other than interventions, whereas I think in Switzerland that's very much the idea that he would have measures beyond intervention, such as these administrative that I mentioned at the beginning. So I think the determination of the Swiss National Bank is stronger than of the Japanese policymakers.
Okay, thank you, Bayet. As ever, the Dukascopy TV team will continue to monitor developments in the FX market, but for now, goodbye.